Quantum eMotion Corp, trading under the ticker QNC on the TSX Venture Exchange and QNCCF on the OTC markets, is currently navigating a highly volatile period. As of the market close on Friday, January 23, 2026, the stock is priced at $5.50 CAD, marking a decline of 1.79% during the session. While the market is currently closed for the weekend, this closing figure reflects an intense tug of war between speculative retail interest and a shift in technical momentum. Throughout the day, we saw a massive intraday swing of over 9%, with the price pushing as high as $5.80 CAD before sliding down to find support near the $5.31 level. This kind of movement isn't just noise, it is the physical manifestation of a market trying to price in a massive structural shift in how the company accesses capital and validates its technology. The insight most people are missing right now is the sheer speed of the institutional pivot. While the general public still views this as a tiny Canadian penny stock, the recent filing of the Form 40F registration statement with the U.S. Securities and Exchange Commission is a massive signal. This is the bridge to a listing on the NYSE American exchange. When a microcap makes this move, it isn't just about prestige, it's about liquidity. It moves the stock from the fringes of online investing into the crosshairs of major funds and investment firms that are strictly prohibited from buying venture-listed assets. We're seeing a valuation gap where the paper expectation of a speculative tech firm is hitting the reality of a company preparing for the big leagues. The common belief holding many back is that quantum eMotion is just another quantum thematic play with no substance. The reality, however, is that while high-profile names like Nvidia stock or Apple stock dominate the AI and hardware headlines, the security layer beneath them is where the actual risk lies. The market expects quantum eMotion to continue burning cash in obscurity, but the reality is a sudden acceleration in real-world partnerships, such as the recent integration with Aegis Critical Energy Defense Corp. They aren't just theorizing about quantum randomness, they're putting it into battery storage systems and energy grids. This transition from laboratory theory to industrial hardware is the exact moment where the tension between investor skepticism and operational reality tends to snap, often leading to the violent price action we've seen this week. Recent trading volumes have been telling. We saw over 1.1 million shares change hands in the last session alone, which is significantly higher than the historical averages for this ticker. Institutional activity, though still in its infancy with only a few recorded owners like NBC Securities and Bessemer Group, is beginning to show signs of accumulation. When you look at the Fidelity or Schwab Intelligent Portfolios models for emerging tech, they often look for these breakout filings. The fact that the stock is holding above its 50-day and 200-day moving averages despite a red day on Friday suggests that the underlying trend remains bullish. The expectation was a sell the news event after the NYSE filing, but the reality is a consolidated base that is refusing to let go of the $5 handle. For those using a Robinhood account or exploring interactive brokers to catch these swings, the technicals are screaming a story of high-stakes positioning. We've seen the relative strength index flirt with overbought territory, which explains the Friday pullback, but the support levels are moving up almost daily. If you're managing an individual brokerage account, you've likely noticed that the bid-ask spreads on QNC can be wider than your typical blue chip. This is where self-investing requires a bit more nerves. The volatility isn't a bug, it's a feature of a stock that has grown over 300% in a year. The expectation of a crash is constant, yet the reality of the price action has been a series of higher lows. Let's look at the business model for a second, because it's important to understand what is actually driving the ticker. Quantum eMotion specializes in quantum random number generators. In a world where AI is making traditional encryption look like a screen door, the need for truly unpredictable physics-based security is becoming a matter of national security. They're moving toward a gigabit speed miniaturized CMOS chip. This isn't just software, it's hardware that can be baked into every mobile device and server. Imagine the implications for Fidelity Investments or SoFi Invest if their transaction security was backed by quantum-level randomness rather than standard algorithms. That is the long-term play that the current price action is just starting to reflect. If you're looking at investing sites for a direct comparison, it's hard to find one. Most quantum companies are focused on the computer itself, the brain. Quantum eMotion is focused on the lock for the door. This niche focus is why they've managed to stay the top holding in the Defiance Quantum ETF. When an ETF has to buy shares to maintain its weight, it creates a floor of forced buying that retail traders often overlook. They expect the stock to move only on company news, but the reality is that its inclusion in broader tech indices means it's being pulled upward by the global appetite for quantum-ready infrastructure. Comment below how many shares of Quantum eMotion Corp you currently hold, or if you're waiting for a specific dip to entry. The path forward for QNC involves a heavy dose of regulatory and execution risk. The expectation is that the NYSE American listing will go off without a hitch and provide an immediate 2x or 3x multiplier. The reality is that the SEC is meticulous, and the transition requires a level of financial reporting that a venture-listed company might find taxing. However, their current cash position of roughly 22 million CAD provides a significant runway. They aren't in a position where they need to dilute shareholders to keep the lights on in 2026, which is a rare luxury in this sector. This financial stability is why the stock hasn't collapsed under the weight of its own valuation. When you use a SoFi trading platform or look through Fidelity trading tools, you see a company with a negative PE ratio, which scares off the value crowd. Their expectation is a traditional earnings-based recovery, but the reality is that in deep tech, the E in PE doesn't matter until the licensing deals for the hardware start to scale. With the Quantolio deal already bringing in $1 million a year and more partnerships in the energy and defense sectors, that revenue zero is quickly becoming the thing of the past. The market is currently pricing in the possibility of success. It hasn't even begun to price in the probability of a global standard adoption. Institutional owners are watching the 4.75 CAD to $5 support zone very closely. If the stock can consolidate here and use the NYSE filing as a springboard, the 52-week high of $5.94 is the only thing standing between it and blue sky territory. For those doing online investing, the danger is getting shaken out by the 9% daily swings. If you're using a SoFi robo-advisor or a similar automated tool, these stocks often don't even make the cut because of their volatility. But for the active trader on Interactive Brokers, this is the kind of environment where the tension between a speculative label and a growth reality creates the most opportunity. Looking at the broader macroeconomic picture, the pressure on the tech sector from interest rate talk usually hurts small caps the most. The expectation is that QNC would be the first to be dumped in a high-rate environment, but the reality has been the opposite. It has outperformed the broader market because its catalysts are independent of the Fed. Its catalysts are SEC filings, hardware breakthroughs, and defense contracts. This decoupling is what makes it an attractive piece of a Fidelity brokerage portfolio for those looking to diversify away from the standard tech giants. As we move toward the middle of 2026, the focus will shift to the production of the first silicon. If Quantum eMotion can prove they can manufacture these chips at scale, the narrative changes from a research firm to a semiconductor player. This is the moment where the reality will likely far exceed the expectations of even the most bullish retail holders. We're currently in the waiting room phase of the investment, where the filings are in and the technology is proven, but the listing and the mass production haven't yet hit the tape. To summarize, Quantum eMotion is a classic example of a company whose internal progress is moving faster than its public perception. We started with a live closing price of $5.50 CAD and a day defined by high-intensity volatility. We've seen how the expectation of a stagnant penny stock has been shattered by the reality of a looming NYSE American listing and industrial-scale partnerships. While the technicals suggest a short-term cooling period after a massive run, the institutional accumulation and ETF inclusion provide a structural support that didn't exist 6 months ago. The tension between its past as a venture experiment and its future as a listed security firm is the primary engine for its current price action. Whether you are using Robinhood for a quick swing or building a long-term position in a Fidelity IRAs, the key is to look past the daily 9% candles and focus on the bridge to the U.S. markets. This isn't about a single day of trading, it's about a fundamental shift in the company's DNA. Would you like me to analyze the recent institutional flow data or break down the technical support levels for the OTC-listed QNCCF shares next?